Hello and welcome to Crux Investor. Today we speak with Vincent Metcalf, CEO of Nomad Royalty, another royalty company. We do like them. These guys are all ex-Osisko. They've hit the floor running, and we talked to them today about their business plan. If you want to get our thoughts and views on the interview and indeed the company, you can get that at cruxinvestor.com/club. We can also get company reports, analysis from experts from all around the world, training videos, summaries of other interviews that we've done. And of course, you can meet a thriving group of investors who are sharing their thoughts and ideas with each other. And if you go now, there's a 7-day free trial. And of course, we'd like your feedback too. So do give us a like, leave your comments below. And if you want to see what we talked about, take a look in the description below. Vincent, how are you doing, sir?
Very good. Thank you very much. It's been good in Montreal here. So, we're going through COVID, but at the end of the day, it is what it is. And you got to adapt.
You got to adapt. I like the attitude. Adapt is fantastic. Sound like a Royal Marine. Right, we're gonna talk about probably something which has been the focus of your attention for the past few months, which is Nomad, and we love a royalty story here, and so we're going to hear about that. But when you kick off and give us a 1-minute overview of the business, then we'll pick it up from there.
Absolutely. So I would say that Nomad is the newest significant royalty and streaming company in the precious metal sector. We currently have a portfolio of 12 assets located globally, and most importantly, about 50% of the value is currently in production. Today marks the 4th month anniversary of trading for Nomad, so we're pretty happy with that. And our current shareholders right now, their largest are Orion Mine Finance and Yamana Gold.
Fantastic, nice summary. Now, you weren't kidding. You've hit the floor running. You have really hit the floor running. You're already a nearly 850 million market cap company. You're only really a few months old. I think most people are quite jealous of your position, but I want to go back a bit. I want to explain to people where you've come from. What's the history? What were you doing before this?
Yeah, so there's 3 partners in Nomad. So there's Joseph, Elif, and myself. We spent the better part of the last 6 years together in another royalty company, which you've interviewed in the past at Osisko. We were part, I would say instrumental in leading a lot of the different deals for that company. We had a tremendous time with them. We also have a lot of respect for them. We all left at different times. When Joseph joined about a year or so ago, we were able to look at different things. We had a shell which was cleaned up. I think the last thing we wanted to do was actually create a royalty company, but we got a phone call from Orion, which were in the middle of a sale process for certain assets. We knew Orion quite well, given the history between our previous company and the group. And, I think they had a very good sense of the management, of the potential management between Joseph and myself. And when they presented the opportunity of looking at certain assets they owned, we jumped on that and we presented a go public transaction, and they bought into it. Because when you look at where the multiples work in the sector between the publicly traded companies and where the sale prices happen, there's obviously a big arbitrage. And we sold them on that concept of buying into it over 3, 4, 6 years and realizing and crystallizing more value along the way.
Okay, I just want to deal with something because again, in the market, there's this perception that you guys left Osisko under a cloud. You just told me you left at separate times, over the course of a year or so, from what you told me.
Yeah, no, I left about 2 years ago. Joseph left about a year ago, and then Elif, who's also a very important part of our company today, she had announced that she was leaving the company. And obviously, as we advanced the discussions with Orion, we needed one of the best CFOs in the business with the, I would say, a tremendous amount of experience doing, offshore business, listing on the NYSE, basically bringing a lot of different tools that you need to be relevant as a royalty company. So we approached her, and having worked with her and Joseph for almost 5-6 years, obviously the match was perfect, and she decided to join us. So it's a team that knows each other very well. We have our strengths each other in different departments. And I think that's what makes Nomad such a great management team and such a great company.
Okay, I'm interested in the thinking because you said I didn't want to set up another royalty company. You got a shell and you're kind of looking around for things to do, and you kind of got this phone call from Orion Finance. But I want to understand the arbitrage there for them. I mean, what do you go into Orion Finance and say, or what were they looking for when they phoned you? What did they think they were going to get?
So that's an interesting point. The obviously the streaming sector is now, I would say, been booming for the last 15 years. We've seen obviously a lot of players come recently in the sector and try to prove that they're relevant. The main thing for us when we sat down with Orion was that the go public of selling assets, it was something that's been discussed, I would say, over the last 5-6 years. We've heard a lot of rumblings about that, private equity groups wanting to go to set up their own companies. Same thing with public companies, wanting to kind of have their royalty arm. Problem with that is that you need a management team and you need a vehicle, which if you're a public company or if you're a private equity, usually your job is to deploy that capital into new investments. So we obviously, it was pretty good timing. We had a vehicle which we had cleaned up for about 9 months. We had a management between me and Joe to start evaluating this. And then, I think what was important for them is, from Orion's perspective, this was in their second fund, so they still have about 8 years of life in that fund. So they're really not in a rush to crystallize value today. And really, that's what we proposed to them. And once they bought into that, we knew Yamana was also selling assets. So we basically crossed the street, sat down with Yamana. Yamana was a group that we knew quite well. Me as a banker previously knew the organization quite well, and Joseph and Elif at that point were also part of the Osisko sale of Canadian Malartic, which they knew the Yamana team really well as well. So, between our different connections, we were able to get both groups to buy into this concept. And, both of them are very sophisticated, and obviously it was a very quick process. We signed exclusivity end of December, announced the deal in late February. So it was a very, very quick deal to put together.
Right, and they're going on your track record there, so which is great. But tell me about structuring, because that's got to be a part of the conversation with them. Because 5 produce, or 50. You're talking about 50% of your assets are in production. So you've got 5 cash flowing assets, and that's fortuitous. And you're whatever 850 million market cap company, and you're focused on precious metals. The kind of multiples you get on that are significant. Do you think they're just a bit crazy in this current environment, or is that realistic?
If you look at Franco, who's probably been the most successful company in the last 15 years, they've always traded at a multiple. In downtimes and uptimes, they've always traded at significantly higher multiples than the rest of the sector. In general, in mining, not just royalties. I think the royalty model has proven it's very, very good. Going back to your question regarding structuring, what was important when we said the last thing we wanted to do was a royalty company is because starting a royalty company when you're small is probably the most difficult thing in the world. So what was important for us and what was really something that attracted us when we looked at the Orion portfolio was the fact that you were looking at a portfolio that was already significantly cash flowing. That it wasn't a portfolio of 150 different assets. We have all our assets right now are in a pretty good position to reach cash flow. I would say in the near, if they're not in cash flow, in the near to midterm. So that was really important because the cash flow for a royalty company is very important because it allows you to borrow. And if you're able to borrow, you're able to structure new streams. And if you're able to structure new streams, you're able to structure, for example, deals between 0.9 and 1.1 times NAV. And if you're trading at a much higher multiple, those transactions ultimately are accretive. You got to make sure the asset works, and you got to make sure that from an operational point of view, things are working. But the successful companies in the sector have been doing it over and over and over. You trade at a high multiple, you buy things at a much lower multiple, and you make sure that on a per share metric, those things are accretive. So having that significant size for us was something that was very important. Starting a $50 million royalty company, that was not in the plan at all. So I think that's where, when we looked at these portfolios, you know what, we're starting with size. This is important. Our goal right now, last thing we want to do is stay a sub $1 billion company. We want to get to the $3 to $5 billion range as quickly as possible, because we know that's going to fuel, the passive investors, which have a very, very big appetite for the royalty multiples, or the royalty companies, and that fuels the royalty multiples. So, we've been in this business, and we know how it works. We want to make sure that, we hit all the marks, and we want to create a company that's going to be very attractive for a generalist and just an investor in general.
Okay, you're talking institutional investors, that generalist institutional, right? I get why you wouldn't want to start off as a 50 million or 100 million market cap royalty company. We've interviewed a few recently. They've got a whole different set of problems to the ones that you're talking about. But your problems are still there. They're just bigger problems that you've got to deal with. So it's very competitive at that environment. So buying the multiples that you're suggesting, is that realistic? 0.9, really?
Well, I would say that our peers right now are trading between 1.5 and 2 times NAV. So, we're somewhere in between there. So if we're buying things at 1 times NAV, that's realistic. I mean, the thing with net asset values, as the long-term gold price goes up, typically those net asset values also go up, right? So the multiples go down. So, you got to readjust in this, depending in the market that you're in. The great thing about the royalty business is that you play both markets. You play the precious metals. You're also involved on base metal, projects. So, if something gets too expensive on one side, typically the other side is actually, there's a lot of good opportunities. So, that's where, we need to be competing, is making sure that we adjust. I said it earlier, you got to adapt. Sometimes you're hunting on precious metal opportunities. Sometimes you're looking at base metal opportunities, and sometimes there'll be small deals. Sometimes there'll be big deals. But, the most important thing for a royalty company is to be very transaction focused and to execute on that.
Okay.
We look at companies as partners. We want to make sure that once we do a first deal with those companies, it's the first deal that marks maybe, the start of something, that's going to be 2, 3, 4, 5 deals down the road. And typically in the last 6 years, that's all how it worked.
I mean, so where does all this come? Is Orion Finance now, obviously the shareholder, they're critical to you, to not only just for what they've done for you to set up, but to find new deals going forward. It's great friend to have, but there's still competition out there. These bigger names, these $1 billion plus companies, they're all fighting for the same stuff. They don't want to dabble with small projects. So doesn't it get tougher?
You know what? We've been in the sector directly involved for 6 years. We've never been this busy. The great thing about the way we're structuring our company, it's, we want to build a portfolio that is as diversified as possible. So we're looking at different jurisdictions. We're looking at different operators. We're looking at, different, I would say the focus is cash flow or near-term cash flow. But our job as a management team is to limit all types of risks. We have to maximize 2 things. We have to maximize resource growth, and we have to maximize exposure to commodity, which in our case is gold and silver. So our job, we're not operators. We're essentially portfolio managers. So we got to make sure we build this portfolio one step at a time and make sure that the overall risk of the portfolio doesn't skew too much to one area, whether it's jurisdiction, whether it's, stage of development, or whether it's an operator. So that's how we view the business. And the great thing about Orion is that they look at a lot of different things too. So they almost act as a second, development corporate team. So they actually bring us a lot of things. They typically look at things that are more on the project financing stage, which for us, we think that's probably the most, risky area for any royalty and streaming company. When you do it, it's where you see the most competition for royalty and streamers. And, at the end of the day, you typically take on the risk of development. So you see a lot of big competition from the big guys. So you end up writing some pretty, I would say, ordinary terms in terms of returns to your shareholders. And then you're in it for 3 or 4 years of development, which on a quarterly basis, you have to explain to your shareholders why they missed the permitting, or why the ramp up is not going as quickly as possible, or why they didn't get the financing window in time. So those are things that we believe the private world or the bigger guys are probably more suited to invest in. Where we're going to focus is on the two other ends, which is early, more on the greenfield side of things, or very near cash flow or in cash flow. But the whole, development phase, if we're going to invest there, it's going to be on, specific things, which I think, what we want to also bring to the sector is syndication of deals. We want to, if we're going to be taking a bet in that middle section, is going to be a risk-adjusted bet, perhaps with one or two other players, whether they're public companies or alternative, providers of capital. That's what needs to we need to bring into the sector is looking at things a bit like banks do when they syndicate bought deals or financings. They don't take the risk all at once. They make sure that they take an adjusted bet into what they want to do. So that's something that's very important for us. We want to make sure we build a portfolio that ultimately in 3 or 4 years, not one of those assets represents more than 5 or 10% of overall cash flow or overall NAV.
Okay, so it's a kind of, seems very sort of actuarial type approach, conventional approach within set parameters. Is there any of this kind of legacy entrepreneurial approach that you guys had at Osisko with regards to getting into PE?
I would say that, from where we sit, it's obviously we're very entrepreneurial, and that's why we started this on our own. But I would say that we've seen, and it's not just Osisko, I would say that in general, the sectors has evolved a lot, and the investors, there's a lot of different types of investors. We want to cater to a specific type of investor. What we want to make sure is we deliver cash flow. This sector is incredibly cyclical. So if gold goes to 3,000, which I hope, we want to be in a position that we have a vehicle that's able to crystallize that value. If gold goes to $3,000 and we have no assets which are in production, and it goes back to 1,500 the next year, well, you know what? That's not our business. We want to be in a business that crystallize that value, take that money and return it either through a strong dividend or through through investments in new opportunities. And we've already instituted the dividend policy 1 month into trading, and that was very important because we want to make sure that our investors realize that we're going to be returning that capital no matter what happens.
Okay, so let's talk about this cash flow thing. You talked about a very short-term example there of like gold getting to 3,000. I think there's a lot of gold bugs would like to hear that from people like you. But royalties is also a long-term game. So what are the things that you're putting in place now that benefit the company and shareholders further down the line?
Yeah, well, look, we started with, the portfolio we started with was obviously very much geared to production. Obviously, with what we're looking at now, we're working more on the back end of the portfolio, which is considered more optionality. The great thing about the assets that we have right now, there are no buybacks. All the assets that we have life of mine contracts. So that optionality will stay there. And the good thing about the current gold environment we're in is that those operators are reinvesting in those assets on a constant basis. So when we were looking at this asset base in November, December, and evaluating the potential, gold price was $1,400 back then. So we're in an environment that as long as it was for us to start trading, we started trading on May 29th. We've benefited from $600 of increase in gold price in all of these assets. These assets are doing even better now than they were back in December. So that's where ounces that were maybe break even at that point have now become economical. So you have that, that asset base that's growing, and these operators have more money to keep drilling. And the great thing is with the M&A that's happening, some of these assets are changing hands and going into bigger operators. RDM, which we have a royalty on, went from Leagold now to Equinox Gold, and they're spending more money on that asset than any operators in the last 5-6 years. So that's the benefit of the royalty sector is that you're able to invest in assets that keep on getting additional sums of money invested in them, and it creates a larger resource, which we have obviously percentages for life of mine.
Fantastic. So talk to me about the cash. You mentioned it earlier. I'm really interested in the way that producing cash now means that the cost of your money going forward in terms of facilities that you're able to put in place and therefore able to drive the growth of the business going forward. If gold stays as it is, I mean, how much cheaper, I just want people to understand how much cheaper money get when you've got cash in the bank?
Well, look, I mean, in terms of, there's different ways of doing deals. So, but if you have that credit facility, terms right now are between, I would say LIBOR +1, +2, depending on, the risk profile of your company. But, you're looking at very, very cheap cost of capital versus, the smaller end of the royalty sector. They don't have access to that credit facility, so they have to go out in the equity markets and raise that money, which, from a cost of capital point of view, that's more expensive. The great thing about what we're able to do when we have that credit facility is go in front of an operator and say, look, we'll lend you this, we'll buy a royalty or a stream on your operation. And typically, if you look at the last 50 transactions in the sector, you're looking at, IRRs probably range between 5 and 12% in general. And from a price to NAV point of view, it's typically around 1 times. Well, if your company is trading at 1.5 times or 1.6 times NAV, you're realizing, that arbitrage. And that's why we also want to stay on the precious metal front in terms of the commodities that we're looking for, because the investors give you that arbitrage. If you're investing on the base metal front, you don't get that increase in multiple.
Right. I think something that surprised me. I know you've only been going a few months. What surprised me is how little coverage you've got for a company of your size, with a portfolio of your size, with the people involved in this. Why is that the case? Why are analysts not knocking down the door to cover you guys?
Well, we're seeing a bit more coverage coming recently. I think what we wanted to do is show everyone that this is going to work. What we've done in the last 3 months. We didn't want to overpromise anything. We wanted to make sure we delivered on what we wanted to do. So that meant closing, the transaction, raising the money. We've graduated from the venture to the TSX. We got the QX listing on the United States side to allow U.S. investors to invest. We got our credit facility in place, which truthfully 3-4 months ago was not a slam dunk given the markets. And then we started, also executing on the transaction front. So we executed 3 transactions so far. We've closed 2 out of 3. We've got 1 that's outstanding. So we wanted to show everyone, there was a lot of questions. How are you guys going to be relevant? How are you going to find deals? Now that we've laid out our plan for the first, I would say 6 to 12 months, we've pretty much hit all of what we wanted to do. And now the main 2 things is increasing trading liquidity and increasing market awareness, which, those are things that are sometimes out of our control. The other things we were able to control. So we focused on that. We got all the tools that we needed to get the company up and running and be relevant. So.
Okay. You don't think there was any legacy issue because of the Osisko relationship, where people were waiting to sort of see how you mapped all this out?
Perhaps, but you know what? We, as I said before, we know what we're doing. We're focused on, what we want to do. And at the end of the day, it's all about, working hard, staying humble, and most importantly, enjoy what you do. And that's what, I would say that the team that we have between Joseph, myself, and now Annie, we're very, very, we know what we're doing. And every time we get on things together, we are very focused on the next steps. And at the end of the day, it's working. And, our investors, we have the benefit of having been able to market to royalty investors for 6 years. So they know us, we know them. Obviously, maybe there was that show me period, but I think we're going to get there. So we're very excited with the future. There's a lot of different things that we're focused on right now, and right now everything points to us being successful in that environment.
Yeah. Okay. So we talked about cash and the ability to generate cash and what that could mean for you in terms of cost of facilities going forward. Some people have written in and asked whether you would consider M&A activity just to, get you up that curve a little bit quicker. What's your answer to that?
That slide's been in our deck since day one on February 23rd. So I would say that, syndication on specific deal fronts is going to be very important. So working with partners. and we've already been involved in sort of this situation this summer with other peers. And M&A is going to be also very, very important. As I pointed out earlier, our goal, whether we run the company or not, is to get a platform that's up and running that has between $3 and $5 billion of value within the next 3 to 5 years. So M&A will have to be part of that, that strategy. We've already announced our first M&A deal with Coral Gold, which we announced a month and a half ago. And I think, but that goes down to being able to sit down with the different parties and finding ways to make sure that it's a win-win for everyone. But at the end of the day, scale in this sector is very important. So if you want to be, relevant, keep being relevant, you have to grow. And obviously M&A is going to be important for that. We've seen a lot of the smaller junior companies pop up in the last 6 months. I think they're going to find it hard. At one point, you also have that flavor of the moment where investors, rush in to support those companies. But when you have one royalty that might be cash flowing and it's eating up all your G&A and everything, your ability to buy new assets gets limited. So for us was really to maximize cash flow, minimize G&A, maximize return to capital via dividend, and that's that's our focus. But M&A for sure. I mean, we know what are the better assets and what fits in a good royalty portfolio. So we have our eyes on a few, and there's definitely a few gems in the rough at the moment.
You're worth a few quid. Your market cap's 850 million, as I keep saying. You're paying yourselves well?
Well, right now, G&A, convincing Orion and Yamana to, basically take shares of Nomad for their assets was one thing. Another, to show them that we were deliver value, was very important. And dealing with Orion, a pure PE firm, they want to make sure that they realize their return, and if you do well, they'll pay you well. So right now, Joseph, Elif, myself are three of the largest single shareholders, and that's the way we wanted to build this business. So in terms of G&A this year, for the first 12 months of operation, we're actually not taking a cash salary. We're taking shares on a quarterly basis in lieu of salary. So that's obviously going to minimize the cash G&A. We're also, we're not listed on the New York Stock Exchange, which from a listing fees point of view is $1 million plus a year. We don't have an offshore sub, which for us was two things. From a risk point of view of future audits down the road, we wanted to limit that as a public company. But also, having done it once in the past, we know what types of costs are involved in setting up that business. You need to double the size of your management team because you need people, offshore, and it just adds to the, when you're looking at transactions, you have to figure out, is this going to be sourced out of the offshore office, or is this going to be onshore, and where does it fit? So those are all things that when you add up over time actually hits your G&A and hits the bottom line. So by limiting those things, I rather take that money and deliver it into a royalty, into a dividend. So those are all things that we had the opportunity of going through and living them. Not to say that we're not going to list on the New York Stock Exchange at one point once we reach the size we believe is makes sense and it's going to bring more to us. But at the moment, what we want to focus on is deals and transactions and building the portfolio and limit that.
Great answer. You did hit on the last point I was going to ask about, which was if you're producing all this cash, are you going to be producing dividends, and where are you going to be in relation to your peers on that?
Yeah, so we've already announced our dividend policy last month. So we're going to be paying a 2 cent per share dividend, which right now gives us a yield of around 1.2, 1.3%, which is double our peers. And that's, again, it's very important. We have the shareholder first mentality. We are shareholders. So at the end of the day, and everything we do is, what does it make? Does it make, what's the impact on the share price? what's the impact today? What's the impact in 6 months? What's the impact in 5 years? And those are three things we always take into considerations when we take decisions, whether it's on a transaction or a dividend. A dividend for us, a lot of certain investors are telling us it might be too soon. Well, you know what? We're cash flowing, so let's return that capital today because we have that credit facility. If we need cash, we've got that credit facility. But we're getting cash is coming in. Let's return it. And prove that we could have a good track record returning that capital, so that when we reach that $1.5 billion or $2 billion mark, well, when that generalist investor comes in, we could say, look, we've instituted this policy, and we have the track record that shows, and it's just a starting point. It's not crazy to think that in 6 or 12 months, as this portfolio matures, we increase it. And we keep returning more capital to investors.
Okay, you've one final one, if I may. The response by the market, as I said, has been modest. It's been good, but modest compared to the story I've just heard. What are the things that you're going to need to deliver to see, and before the market sees what you're doing and can deliver an uptick in your share price?
Yeah. Obviously right now we're still, the majority of shares lie with Orion and Yamana. So they realize also that they're going to have to be, instrumental in providing liquidity at one point, because we have a pretty tight float. So to have the bigger institutions, come into the stock and support us long term, I think that's something that some investors want to see. In terms of day to day of what we want to do in terms of deals, we want to write our first stream. Streams are very, what makes the difference between a junior royalty company and the bigger guys is the ability to do a stream. Buying a royalty, a third party royalty from a vendor is not simple, but it's a 10-page contract. It's you go through, you read, you find if there's any holes. And that's pretty much it. A stream, agreement is essentially a debt agreement that's morphed into this new instrument. So having the capabilities of doing that internally in a company is what makes the difference between a small company and a larger company. We've done it several times. We've bought them, so we know how to evaluate them. This is the second largest portfolio of Orion that we've bought from them, so we have a lot of experience on the stream front. So writing a new stream or originating a new stream with an operator within the next 6 to 12 months is something that we want to do, and I think that will check the final box on really showing the market that we will be relevant and we will keep growing.
Vincent, great story. Thank you very much. And it's first time we've met, first time we've spoken. It's a new story. It's another royalty story, but at least you've, I think, worked out how to differentiate yourself. I look forward to catching up with you soon. So do pick up the phone if there's anything new to say. We'd be delighted to take that call.
Great. Thank you very much. Pleasure having been here this morning.